Hey there traders, this is Steve Miley, the market chartist, with another edition of our Macro Watch Outlook for the week commencing the 15th of March 2021. Value stocks rally as growth stocks rebound despite higher yields. So let's kick off with a look at the macroeconomic and geopolitical developments from the past week. Well, President Biden's $1.9 trillion COVID relief bill was passed into law this past week, which has certainly helped with the general broader risk-on environment. And also Wednesday's lower than expected US CPI report calmed some of the inflationary fears and worries that have plagued market in here with the moves to higher yields that we've seen in here throughout 2021, particularly through February into March. Value stocks surged higher with growth stocks rebounding as highlighted by the Dow, but the growth stocks in here underperforming as highlighted by the Nasdaq underperformance. New record high on the Dow, not doing quite so well on the Nasdaq in here, rebounding from significant weakness, and that all being because of the US yields in here, global yields, but particularly US yields here, seeing the 10-year pushing to yet new high yield territory, to multi-month, even multi-year high yield territory in here. So all of this is signaling concerns about inflation, concerns about higher interest rates, and so we're seeing those value stocks outperforming the growth stocks. In Europe, the vaccination program continues to lag behind that we're seeing in the United States, and also the very impressive UK program, which is disappointing from a global perspective. And the number of cases, hospitalisations and deaths in the UK continues to fall with the lockdown and with the successful vaccination program. But cases in some parts of Europe are on the rise again, particularly in Italy, where we have seen the Italians been forced back into another lockdown in the past week. And also other areas of Europe, talk about Paris going into a lockdown, and other pockets of high levels of COVID-19, rising levels of COVID-19, seeing more stringent measures being looked at or put into place. So let's take a look at the global financial market developments over the past week ending the 12th. Well, we've had a new record high on the DAX. Really, the European equity markets in here leading the charge higher, despite the concerns around the vaccines, despite the concerns about the higher number of cases in parts of Europe in here. The weakness in the euro, dollar strength, weakness in the euro has actually seen European stock indices lead the way higher. And also a lot of these European stock indices are value stock heavy, so they're not so much tech heavy. So the likes of the DAX and the Euro stocks have done particularly well in here over the past week, breaking here for the DAX to a record high, for the Euro stocks to multi-month highs. And again, the same chart in here as we looked at earlier, another new record high for the Dow Jones Industrial Average, also posted by the S&P 500 in here at the latter parts of last week, and that reflecting the move into the value stock, of rotation into value stocks, a rotation into the recovery stocks that are anticipated with the reopening of the US and global economy in here, and that's pushing these value stocks and these value indices higher, whereas something like the Nasdaq continues to underperform, partly because there's the lack of benefit from maybe the reopening of the economy, but more so because of concerns about higher inflation and higher interest rates in here, which is weighing on the growth stock performance. The dollar continues its rally. It did see a setback this week. We've had a strong rally in March, slight setback in here, but rebounding at the very end of last week. And similarly, the euro continues to weaken from late February through early March. Again, a little bit of a recovery for the euro through the middle of the past week, but weakness coming back through on Friday. And another similar story for the pound in here. The pound selling off from late February through into early March. Small bounce last week, but Friday again finishing on a negative tone for the end of the week. And the pound looks vulnerable, particularly the pound looking vulnerable in here because it's had such a good run in here. Not just post-COVID, post a big sell-off we saw in March last year, March 2020, but also we've had this really strong run higher because of the semi-successful outcome from Brexit, because of the successful vaccination program. The pound has been a strong performer in here throughout late 2020, early 2021, but certainly under negative pressures as the dollar has strengthened in here from late February into early March. And also the Aussie in here has rolled lower from late February, a slight rebound from the middle of last week, but a weaker close on Friday. The one kind of outlier in here is the Canadian dollar. The Canadian dollar continuing to strengthen. So the dollar, the US dollar, weakening against the Canadian dollar. So pushing to new lows in here on Friday. Just taking out the late February low in here for dollar CAD. And the Canadian dollar particularly strong in here because of the strength of the oil price, which we'll look at now. So a surge higher in the oil price at the beginning of March. We saw a slight dip lower in oil earlier last week, but then a strong rebound into the end of the week. And that strengthening oil reflecting a belief in the global reflation, a belief in maybe inflationary pressures, and also the fact that a week ago OPEC Plus decided to keep the restrictions on the oil supply in here and the production. So that's keeping the oil price higher and benefiting, as we said there on the previous slide, the Canadian dollar. On the copper side in here, looking at some other commodities, copper has staged a rebound, having had that risk-on theme that we saw across global equity markets and many markets in here from the end of February, early March, also impacting copper. Copper has tried to rebound in here, though, as we've moved back to more of a risk-on theme going into the past week. And then if we take a look at the gold in here, with the US dollar staying relatively strong, we're seeing gold looking still very vulnerable in here. We did get a slight gold rebound from the 1680 level, but fading in here from below 1750, and the market looking still vulnerable. The gold future in here looking vulnerable as the US dollar stays strong. Okay, let's take a look at the week ahead, week commencing the 15th of March 2021. So just to point out, this weekend the US did switch to daylight saving time. So the difference between the Central Eastern time in here from New York time and the UK GMT, which is usually 5-hour difference, is now 4-hour difference. So the clocks have gone forward in the US, having yet to go forward in the UK or Europe. This week we had the Eurogroup and Ecofin meetings on Monday and Tuesday respectively. Not expecting too much out of those, but we could get some developments re the vaccine here, the vaccine rollout, and that will be interesting to watch. So we're certainly keeping an eye on those Eurogroup and Ecofin meetings Monday, Tuesday. As ever, we're going to be watching for those COVID cases, particularly in Europe in here, as we've seen the rising number of cases and concerns about hospitalisations and deaths given the slower rollout of the vaccine program in Europe. And we're going to monitor for new lockdown updates. In some areas, we're seeing lockdown easings. Certainly in the UK, we're continuing seeing some of those easings come into fruition the past week in here. Schools having gone back in the UK, but maybe more stringent measures in parts of Europe. We've already mentioned Italy in here, watching out for announcements from France and possibly Germany as well. On the central bank side, we had 3 major central banks in play. On Wednesday, we get the Fed, FOMC, the Federal Open Market Committee. We get their decision on interest rates, their press conference and statement too. Similar on Thursday from the BOE, the Bank of England. And then on Friday, we get the Bank of Japan. So watching out for all of those this week on our central bank watch. And looking at the major data, well, there's nothing really huge in here this week. We do have those 3 meetings. We also get Chinese retail sales and industrial production to kick off the week in here. Those Eurogroup meetings also Monday. RBA meeting minutes early on Tuesday alongside the Ecofin meetings. German ZEW survey, always watch, so that's going to be important. And probably one of the more important pieces of data of the week, the US retail sales, also on Tuesday. We get CPI inflation data from the Eurozone and Canada both on Wednesday. Alongside that, very much watched in here, FOMC interest rate decision. What are they thinking about the fact that yields are surging higher at the longer end of the yield curve and the yield curve steepening? We get New Zealand GDP on Thursday and the Australian employment report, and then that Bank of England interest rate decision statement and press conference Thursday, and the weekly US jobless claims. And we finish off the week with the Bank of Japan interest rate decision. I'm going to wish you all a great trading week. Please do stay safe out there. Please remember to hit that like button on our YouTube channel, and don't forget to subscribe to that YouTube channel. I'll be back with you very soon in here. Take care and have a great trading week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.